Ladies and gentlemen, it's very easy for people to show you the most amazing strategies that work and how simple trading can really be. But what you will notice is that the majority of traders actually suffer from certain issues. Things like position sizing, choosing the wrong stocks. Your ideas are maybe not so great. You're up money, but you still can't size up no matter what you do. Maybe you're averaging in. Maybe you're doubling down all the time on your losers. Maybe you suffer from FOMO. There's a trade, and a lot of people did well, and they're all talking about it, and you heard it, but you didn't take it. Now you are suffering from the fear of missing out. Maybe you're holding losers too long. Maybe you fear the fear of losing money, FOLM. Maybe you're just treading water, trying to stay with your nose barely above the river stream, but you're unable to get out of the water and start flying higher. Maybe you're aggressive with multiple positions. We're going to talk about some of the most common issues traders face. We're going to have a special Newsbeat trading psychology episode for you. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Pull up some popcorn, pull up a drink. We're going to be going through just a really beneficial episode. I find it so easy to just talk about winning trades and show you pitch you with a fabulous P&L, and maybe I should just walk in front of a car dealership in front of a few Ferraris and Lamborghinis, take pictures, and make you wonder if I really own those cars, or maybe I should just fly first class and take a picture of me smiling on the plane and only take the picture of me in an empty seat next to me, and you'll be wondering, is that Mark Melnick's private jet? And you'll be wondering all these things and thinking, oh my goodness, this man must know it all. He must have it all. I have to listen to this person. Or instead of that, maybe let's just go over something real that afflicts traders out there that gurus aren't really brave enough to address. They're not brave enough to address this because they feel it almost shows a sign of weakness, when the contrary is actually true. You see, as a trading guru, ladies and gentlemen, I am supposed to only show you good and never bad. It helps my image, it helps the brand, and it helps the positivity. If I come and I just show you a bunch of winning P&Ls, which I could probably do more consistently than every single guru on Wall Street in terms of hit rate, you might think that, oh my God, this is exactly what I'm looking for. But instead of nonsensical BS on a Friday night, I figured I would actually spend time and add value. So we're going to be going over a really nice list here of names. We're going to, of names, of issues rather, that people suffer from on a special 555 Newsbeat psychology episode. And it's kind of funny that this is Newsbeat show number 555 because that's the stereotypical phone number that they do in movies and commercials and ads because, you know, 555 isn't really anybody's number. So they're like, and like you ever watch the show 24? Who here has seen Kiefer Sutherland in the show 24? Great show. I used to love the original seasons. It was great. And and remember like when he was Jack Bauer and he would come up and he would say, if he was talking to like Chloe or something, it'd be like, Chloe, call me back on this number, 555-1212. And it's like, your number's not that. Come on. Come on, Kiefer Sutherland. Chill. That's not your number. But this is an episode 555, and it will be very informational, and we are going to bring you a ton of value. So let's go ahead and start talking about position sizing. So these issues, we're talking a lot of people, and again, maybe tomorrow's episode, I'll be showing you a lot of great stuff and a lot of new things that we've been doing. But for this episode, strictly psychology, and hopefully I'll bring value to one of your issues. And again, if you like this video, there's a free psychology ebook. You can sign up for my free open house in the video, and you can email me directly if you have any questions. All of that is for you. Instead of, hanging out with my boyfriend or girlfriend or husband or wife, I'm here on a Friday night hanging out with the people I love most. So, position sizing. And of course, read this slide, pause it, read it, and then hit play if you want to watch this video. Okay, thank you very much. Let's go into position sizing. So, position sizing is one of those things in which I really have like almost like a mathematical method to it. I try to make myself really clear every morning with my position sizing, with how the market works. And usually I'll say I'm taking it slow. And I literally have like a rating system. So when I give like a name, for example, I could give you my list today. Ironically, I didn't trade any of the names on my list. But like right over here today, I give like 1.5 out of 10. Like what on earth does that mean? Well, I actually have a rating system for my plays. And if I give it a 1.5 out of 10, I'm generally doing about probably 2.5 to $5,000, $3,000 to $5,000 worth of options, somewhere between these two numbers. And it basically shows how many dollars I could throw out a trade based on options. And I also did it as a generalization from a share amount. Share amount is a little bit different because if I'm buying a Dropbox, which we called overnight on our earnings side and did well, I would be a lot heavier in a Dropbox than I would, for example, an Apple or Amazon, just simply based on dollar value. So what I do is just to show you this, and again, you could pause this video. I'm going to go scroll down right here. How I size it. I size it based on conviction. And you might be saying, well, where does the conviction derive from? And that's when we get to a very interesting long conversation. But I want to shorten it for you. It is based on the market, the sectors, the news, the technical setups, all those things combined, the day of the week, the upcoming events in the week, all those factors derive conviction. They're all derived by conviction level. So if I've come out with something and I say I have a 4 out of 10 conviction, the truth is this number could be a little higher. I haven't updated this number in a while as I've been growing my account, but this is a little old, but it's a good generalization. And as you can see, I use the word generalized. So basically, the higher conviction I give something, the more money I'm willing to throw at it, and the higher amount of shares that I'd be willing to take it. Obviously, I'm not taking a million shares of Apple. I cannot afford a million shares of Apple, but you get the picture when it comes to higher conviction. So other factors that change what I'm doing here is the time value. And if you're in the Newsbeat library, I'm just going to copy and paste this whole thing for you right now. But if you're watching on YouTube or Facebook, this is how all these things are doing. Option spreads. Are you trading Amazon, Google, Tesla, Cisco, Microsoft, Apple? The larger spread should reduce size. Tighter spreads is easier to mitigate risk, and larger sizes are more justified, especially with option spreads. It actually deals with stock spreads too, but you'll usually have more issues with the option spreads. When trading stocks, the level 2 spreads between the bid and offer change risk as well. Larger the spreads should reduce size and vice versa on tighter spreads. Market orders versus limit orders. And then what I try to do is, because I can't legally tell you how to size in your positions, what if you had a $10,000 account? I said times 10 because you could times any of these numbers by 10. If you have 50,000, you could times them by 5. So this X10 here is just an example of that. So I said, what if you had a $10,000 account, Mr. Melnick? This is how I would trade my own ideas. Obviously, I have a larger account than that, but for those who have smaller accounts, and again, if you have a $5,000 account, you could divide these numbers by 2. So I can't really legally tell you what you should risk, but that's how I would approach it. So when it comes to position sizing, all these factors of the market and everything come into account. The biggest issue that people do when it comes to position sizing is they think their position sizing has to do with the amount of dollars they're risking. That is just, I have found to be a very poor assessment of the situation. I'll prove it to you right now. Let's say I'm saying that you should risk $1,000 on every trade. All right, maybe it's $100 for you, or $10, or 5,000. It doesn't matter. Let's say, for numbers' sake, you're risking $1,000 per trade. You know what that shows you? It shows you have an ineffective methodology right away. If you're risking $1,000 on every single trade, unless you have like a real, when you risk $1,000, if you risk the same amount on every trade, you know what that means? It means you don't have any conviction whatsoever. Now, again, 100% of strategies out there where you take the same dollar amount that I have seen every single time, every single day, regardless of the trade, generally means you will fall in the 43-57 paradigm, which to me is when you're, whatever strategy you use, you're going to be right 43% to 57% of the time. And that's a part where it actually, psychologically speaking, confuses your brain, because your brain doesn't know if you're doing something right or wrong. And you always feel like you're right on the edge of success and you're right there and you could just never hop it over. And then you get stuck there for pretty much the rest of your trading career until you get frustrated, you size up, and then blow out. And I know a lot of you are like, oh my God, Mark's talking about me, talking about the majority of traders who are underneath this methodology. Now, fairly enough, I'll admit there's one thing that I do that is under the 43-57 paradigm. Does anybody in the Newsbeat live room want to guess? Anyone in chat? There's one strategy I do that's under the 43-57 paradigm. One. And I freely admit it. That's right. That's right, Blake. That's right, Cliff. That's right, Ken. That's right. My earnings ideas. But my earnings ideas are so expletive financially consistent. Like, I told Newsbeat, like I even showed you guys yesterday on the show, the 6 names I chose for overnights. Guess what? They all made money. Every single one of them. Every single one of the names made money. Now, what was the first thing I said to the room? I usually will not bet 6 out of 6. I will deal with losses, gains, losses, gains, losses, gains, losses, gains. But the numbers speak volumes. And granted, this is bet on a $100,000 bet. If you're betting $10,000 for these trades, you could just say instead of saying you could be up 167,000, maybe you could be up 16,700. And you get the picture. If you're doing $5,000 worth of common stock per trade, maybe you would be up 8,300. So you get the picture. And if you're betting more money, obviously you can multiply that. But this falls under the 43-57 paradigm. And you won't hear much about my earning strategies, but I will tell you right now that there are traders who do nothing but that in the Newsbeat live room. They signed up for our service to do nothing but this. And one person reached out to me and is like, Mark, I would spend 5 times the value of your room without blinking just for these earnings plays. Please keep doing them. And a lot of you have expressed that interest. A lot of you guys made money. How many of you guys in the Newsbeat live room absolutely love our earnings ideas overnight because they just work overall? They just simply make money overall. And it's, again, just one thing we do in our service. Now, that's under the 43-57 paradigm, back to my point. On my earnings names, I have pretty much similar conviction about on every single name. Some of them I'm like, do, half size or lower size or more, etc. I get that. But when it comes to position sizing, you don't have any conviction behind your own ideas if you say that you should risk X amount per trade. Now, I know humans love to be structured. All right, you still think that I'm making this up and you still think I'm wrong? Okay. The best traders I know aren't making billions, but they're making the best traders I know can make 1, 2, 300 million a year, like managing like large funds and things like that. Those are the best traders I know. I'm not talking like hedge funds that just sit there and hold positions. I'm talking like active intra like longer intraday time frames to 1, 2, 3, 4, 5, 6, 7, maybe a month out, doing a combination of the two type traders. Those are the best traders I know. They never have this defined risk unit. As soon as you take somebody and you put them in a box and you say, you enter here, you exit here, you take profit here, you're going to fail. Oh, you still don't believe me, right? All right. Well, allow me to retort if you don't believe me. Why are 97% of all these traders in all these other trading rooms fail? Why are they all blowing out their accounts? Why are they all promised something amazing and they fail? Why aren't they able to see with their own eyes what's working? Why? Why is it impossible for them to even see it? Forget about even if they're doing it or not. Why can't they see it once they're part of the service? Explain that to me. Explain to me why such a lot. I know 100% of people don't make money. I'm not even talking 100%. Explain to me why 97% of them outside of our room are losing. Explain that to me. Explain why none of them sign up after they pay for one subscription, they're gone, and it's like the revolving door. You have in, marketing budget in, people leaving after they can't make money, and the door just keeps spinning, and it just keeps going like this. And the door keeps spinning, and there's in, and there's out, and it just keeps spinning forever like this. That's why these rooms don't grow in numbers. That's why all these trading rooms and services out there, they don't really grow. I mean, they grow to a certain point based on a marketing budget, and they maintain versus that marketing budget. If you do the same marketing budget year after year after year after year, you're not having any significant growth past 2, 3, 4, 5%. They'll start with this, like if you dump, millions of dollars in your marketing, yeah, you might get 1,000, 2,000 people stepping in your service. Let's say even it's 1,000 people stepping in your service. But if you do that same marketing budget next year, you're not going to really have anything significantly more than another 1,000 people, all with different names and different credit card information. Do you understand what I'm saying? You cannot structure an individual and say they have to risk the same amount every single time because they will lose. And you can believe whatever you want. And I welcome you to. And I welcome you to do what Wall Street is telling you. And if what Wall Street was doing was guiding you correctly, you would be sizing correctly. So I created a conviction scale based on a myriad of factors, a plethora of factors. And those factors include everything from fundamental analysis to news flow to technical analysis. And if you think just people just looking at the chart is going to make money for the majority of people out there, I mean, I've been in this game going on 21 years. I beg to differ. Stock selection is important based on news, and then you add in the technical analysis, and then you're making sense. So here it is. This is how I would treat it based on my conviction scale. That's how you do position sizing. You base it on the conviction of your trade, the conviction of the day, etc., and all the factors I mentioned. Next, wrong stock selection. Member of the room is like, you know, I'm choosing the wrong names, and I guess sort of this like number 2 and 3 go together. So I'm going to address both of them. My trading stocks ideas are not so great, and other people with other trading stock ideas. So as a member in the room said tonight, basically, Mark, I take your trades, I make money, but then I'm stupid and I do my own trades and I lose money, and I don't really think you're stupid, but this is how you solve it. And a lot of the stuff I'm going to tell you tonight might seem very easy, and to actually do it doesn't take effort or money. It just literally takes you have to literally take your ego aside, fight it, and look at it. Because when you look at something visually, do you realize that certain smells can release a unique chemical concoction within your brain and create certain neurological links within your brain that are completely unique based on a smell? That's why, like, if you had something you really loved and it smelled a certain way. If you smelled that, you would get that a similar feeling over time. It's kind of crazy how that works. So what I like to do, instead of just telling you the answer, is actually having you create a neurological connection within your brain to enforce the answer. I think it's very easy for Wall Street to tell you what you have to do, but then when you actually do it, it's almost impossible. So, what you need to do is if your trading ideas are not so great, but you're making money on mine, and that's again, I'm doing problems in the Newsbeat live room. These are the most common problems that the struggling population uh, goes through. Okay. So I know I'm only supposed to show you all the testimonials of the winners. I'll do that tomorrow if it makes you feel better. But wrong stock selection, you have to look at every single name that I take in the room, and then compare that to every single name you've taken, and add up the P&Ls of both, and look at them. If you do not do that, if you're too lazy to look up your own results, and I'm not even saying it's easy. People are like, oh, it's easy. I'll just type in my, yeah, do it. Do it. How many of you have looked at the results of every single one of your trades in the past, I don't know, month? Let's be honest here, right? So you have to look at it, you have to do the totals, and you have to look at the two numbers every trade that Mark takes, every trade that I take. And again, I'm just using myself as an example. If you're using somebody else, if you're talking on Twitter to somebody else and using their ideas, do the same thing for their ideas. I'm just talking from the Newsbeat live room. Don't think you have to like, the only way to apply this methodology correctly is to be inside my service. It isn't. Okay. Now, this is the number one issue that traders have been having in the past 9 months. Let's see, June, 8 months, 9 months since June of last year. I'm up money, but I can't size up. I had a phone call with a gentleman tonight. They're up money, they're making money, but they still can't find it within them to size up. If I was like everyone on Wall Street, I would tell you have to choose a number, find your risk ahead of time, accept it, and pull the trigger. And that's what I'm supposed to tell you. But that's a lie. It's not a lie in terms of what you could do to bet more money, but you're not going to be comfortable with it. And I know they tell you that you have to be uncomfortable to trade. No, trading should be actually as comfortable as humanly possible. I used to think otherwise. Trading should be as stress-free as possible. It's not possible to make it completely stress-free, but it should be as stress-free as possible. And I never knew that until I started trading my own methodologies here. So if you're up money but you can't size up, my suggestion is that you still have psychological toxicity and you're growing. Because if you're making money and you can't size up, you came from a place where you were losing money either before or just maybe as you immediately, joined the service, whatever number of months, whatever. And then you grew, you got to the point where you're making money, but you're still uncomfortable taking bigger size because you're afraid you're going to lose. You're chipping away psychological toxicity. One trader I spoke to is up like 3,200 for the month. And they're happy and they say, look, I've come a long way. I've been blasting out all my accounts. I'm losing money. And it's a modest sum of money, $3,200. And they're like, I want to size up. And they showed me their numbers. They're like, let's see if I could even pull it up. I think I could even pull it up. Hold just one moment. I want to see because he literally said to me, like, look, here are my stats. Let me just take a screenshot of it because I don't want to share his name, just privacy. All right. So I'm just going to cut, copy, and paste. All right. So here it is. So he's already like super toxic, and I'll show you why. So he emails me this a few days ago, right? So he literally tells me how he's doing on all my strategies. He started doing my strategies. He's a profitable trader, which he doesn't even realize, in terms of everyone else out there, how unique it makes him. Maybe in our room, it doesn't make you that unique, but, and again, please, as I say this, please don't think I'm saying this out of conceitedness. I have been failing trading rooms for years before I was able to get to the point of where I am today. I've been running trading rooms. I'm going on my 13th year running a trading room, and I have failed miserably. So please don't think I'm coming from a point where, or like trying to sound conceited. You know, a dude spending his Friday night when his friends want to go hang out with him in Brooklyn, a dude spending that time with you right now to try to address issues is not the cocky, conceited guy who's, uses the bathroom in the morning and the whole house smells like roses. Okay? All right. All right. So he's literally showing me here where he's doing well. And if you don't know what AK50 is, Chatter, KYL 8, 20, one and done, they're strategies we do in the room. So what I say is find out what you do best. And obviously that would be Chatter, know your limit 8, know your limit 21, one and done. Mark 5 is, I'm going to put it on here blue because he needs to slightly improve in that. And probably needs to slightly improve in this too, because I believe in 70% plus hit rates. The dude is making money using our strategies. Some people do better using other strategies, right? So what I realized here for the dude is his best strategies are right here. And really, when you look at the sample size, the dude really does well on the one and dones. So he sends me and look, you could, and what was my point that he's already toxic? Look at his email. I'm serious. Like, I could already tell you're suffering psychological toxicity. He's like, hi, Mark. I know you probably get hundreds of emails a day. I do. So I'm not a day, not hundreds a day, but in a week, sure. I know you probably get hundreds of emails a day, which is not true. So I'm not sure if you got this from Tuesday night. I wanted to add my trade strategy history for the past few months. So already he's already coming from the psychologically defeatist attitude, but he's being kind about it. He's like coming from a place of goodness, of love, of caring. He cares the fact that I get all these emails and he needs help because he's suffering psychological toxicity, even though he's making money. Because the dude wants to size up and he doesn't know how to do it. And what I am telling him is what this doesn't show. And the dude is I've known the dude and he's been losing money from a while, ready to quit trading and started making money whatever for I don't know how many months, okay? That's who this dude is. So what this chart is not telling you is the psychological gains that he's getting. When you're coming from a losing trader, I know so many of you out there, you're looking for the next service where you're just bleeding, losing money into you're making back everything you lost the very next day, week, month, and everything is just 100% great. And I know for a fact that would make you happy, but you got to be a little realistic. Got to be a little realistic. A lot of traders out there who lose money, just about every single one of them I've ever met in my entire career, suffer psychological toxicity to some extent, whether they're profitable or not, but definitely if they're not profitable. They're suffering psychological toxicity. And what this trader is not taking into account here is what a great job he's actually doing at chipping away his psychological toxicity. What a great job he's doing chipping away at psychological toxicity. And again, just for the record, he should probably, demo account these trades. He needs a bigger sample size over here, so it's really hard to say, should he do these trades with 2 or 3 number of trades? He should probably get a larger sample size. But this is how this so he discovered his strengths. And what he doesn't take into account is that he's chipping away psychological toxicity. And when it comes time to size up, where you're up money but you can't size up like this gentleman here, it's a natural transition. That's what Wall Street doesn't tell you. It's a natural transition. As soon as you think about sizing up and you start forcing it, that's when you're going to lose money. The point of when I size up, and I do it quite often, and in some environments I'll size down and I won't even blink about it. But when I size up, it is so natural. It's like, hold on, I'm making money like 85% of the time on this. I don't need to do 50 contracts. I could do 150, 200, 100, depending on the name, of course. If it's a Tesla, I might not do 150, 200 contracts. I might do, more of a 25, 50. But the point being, you know, it comes naturally. You're not supposed to force it. And don't underestimate the fact that if you're even making, even if it's just a few thousand, couple thousand, 4 or 5 thousand, whatever it is, and you could get to the next level, you're actually gaining a lot more than the P&L on your screen. Don't underestimate it. Next thing is step 5 over here, averaging in and doubling down. That is a very toxic thing for traders. So I was actually about a month ago looking at, so the most common time where traders average in and double down is when they open up a trade and they're down money immediately. That is the most common time they will want to double down. And that's when your account is risk, and that's when you can have that blow up day. I've had at least two of them in my life, not where I blew out my entire account, but like where I had a really bad day where I would make like, you know, 20,000 a month, 20,000 a month, 30,000 a month, 20,000 a month, and then one day I would lose $35,000 and $40,000. Like I've had those, like I think it was 2005, 6, 2007, somewhere around there. I don't remember the exact day, 13 to 15 years ago, let's call it. But like I remember it. It's not a good feeling. It's one of those things that you remember. And it did involve averaging in and doubling down. The best, you want to know what was common. So I've spoken to a bunch of traders, I've met a lot of traders, I've mentored traders. You want to know what is the same exact commonality of every single trader who has doubled in. You want to know what is common about every single, there's one thing in common. Not that the stock just went against them, something else in common. You want to know the one thing in common? All right, things they have to win. I'm going to tell you. The one thing every one of those traders who average in and double down in common is they opened up their position with a market order. And they're under the mentality that they need that instant fill, that instant gratification. In English, if you suffer from doubling down a lot, force yourself to enter positions via limit orders. If you do that, your odds of doubling down decrease phenomenally. I know my answer sounds so easy, but if you actually knew the number of traders I have helped by using this method and how many times I have failed over the 13 years earlier in my broadcast career trying to help traders from this with different methods, all coming from a good place, don't get me wrong. Of course, you're trying to help people, but all coming from a good place to help people. I'll tell you right now, this method I'm sharing with you is the one that worked for most people. So when I'm giving you these answers, I've had tens of thousands of traders as guinea pigs to figure out this solution. So don't underestimate the answers I'm giving, please. Fear of missing out. That is the next one on the radar here. So here is the fear of missing out, right? So with the number 6 FOMO, there's one thing in common again that everybody from FOMO suffers from. They're not making money in the market, any serious money in the market, which they're comfortable with. Somebody will call out a play. They'll start saying, "Oh, this is great. This, and I'm up this, and oh my God, ha ha ha! Everybody's having a good time." But you are not in the trade. You could have been, but you are focusing on this. You used the bathroom. You took a phone call. You are watching this other stock. Maybe you just didn't like it at the time. You didn't know why you didn't like it. The only way to solve FOMO is to become a consistently profitable trader. Because if you're not, you're probably losing money. And most traders with FOMO have losing accounts and they see the big trade as the trade that could have saved their entire account. Um, I'll give you an example, which something that could have caused FOMO for me. That maybe, for most traders would have caused FOMO. So today, today we bought stamps. We bought stamps at 10:29 a.m. right over here, and I'm not sure. And we also called it on the Newsbeat overnight long. It was our best overnight play so far this season. Calling stamps long, just honestly had every single factor that I liked. It's our highest. It was our highest rated buy for earnings using our system. And if you don't know what our system is, I did an entire video on Newsbeat Show 554. Just watch Newsbeat Show 554. And I explained why stamps was our highest conviction earnings overnight long and why we absolutely crushed it. But today, um, I did one idea. I had one idea by 10:30, 10:29. Let's call it 10:30 in the first hour. One idea for the first hour. Buying stamp calls right over here. And I sat there and I held it and I'm saying these calls are going to double. At least they're going to double, they're going to double. And then as the market is falling, stamps exploded. I bought next week's 170 calls. I bought next week's 170 calls at $2.20. By the time I was up triple my money, I was like, that's it. Market's going down. I'm done. I'm done. That was it. I couldn't hold anymore. I was up three times my money. I couldn't do it. My calls tripled. They were three times higher than what I paid for. And then of course I sold out my 220 calls by like 660, whatever it was, about like a triple, right? Those 660 calls went over 20 bucks. Next week, 170 calls and stamps. And what happened was a lot of traders in the room, not a lot, but a few, were suffering FOMO. The majority of the traders were like really in a good mood, obviously. I don't want to say popping champagne bottles. We're not riding Ferraris and flying private jets, but we're making good money. And a small little lotto bet, I mean, literally, if you threw $1,000 worth of those options over here, they could have been worth over $10,000 easily. More, like much more. Not much more, a little more. Whatever, you get the picture. 11,000, 12,000, whatever it is, right? Point being is that would cause FOMO for a lot of people. Called it as an earnings overnight here. Again, everybody is celebrating, everybody is happy. This is the day before on Wednesday. Before the market closes, we give you our earnings list for Newsbeat members. As you can see, it was our biggest gain. It went up 38%. And even though a lot of us sold at 130, 179, stamps on that earnings day actually climbed up to 159.70. So a lot of the people, believe it or not, who caught like 40 points in stamps on the overnight, a lot of them were suffering FOMO because there was another 28 points or whatever. It opened at 131. Yeah, there's another 28 points to the upside. And if you remembered my words, what did I say yesterday in stamps? We're going to get another opportunity to play it, and we did it today. So anytime, people say FOMO, and by the way, just as if that wasn't crazy enough, on stamps, right around, what was it, around 10, 11 o'clock here, we talked about buying the 100 and was it the $115 calls, or we have these things called Newsbeat ideas. We give approximately 0 to 1 a day. Approximately. I think we had maybe Dexcom maybe as well. That one might have not worked. but we actually gave Stamp as an overnight trade right over here around 10 a.m. with the 115 calls when they were trading at like, what was it, $1.20, $1.30? In English, if you don't understand options, you don't need to. For every, let's even say 100, let's say $1.50 even, let's raise it. For every $150 you bet, if you held those things into the next day, they would have been worth what? $3,000 a pop. So if you bet like 1,500 bucks, you would be up what? 30 grand? More? 30, 40 grand? Because, it was February 20th. Now here's the thing. We were writing Stamp as if we were thoroughbred jockeys preparing for the Belmont Stakes. We were writing the crap out of it. The problem was a lot of people started suffering FOMO. FOMO is always suffered by people who are in a struggling position currently. If you are struggling in the current environment, you are going to suffer FOMO. Because I believe in consistency, and for those who are consistent, we look at this trade and those people look at Stamps and they're like, whatever, not a big deal. We'll catch it next time. And I'll tell you right now, we have a free open house next week. Come check us out for free. We're going to have more of this stuff. So if you're suffering FOMO, the only answer is to get out of the 4357 paradigm. Every single trading service on Wall Street will put you in the 4357 paradigm, with the exception of ours. Now, why do I say that? Is it cocky? Is it conceited? No, because my entire methodology is based on helping people bat very high. That is my entire methodology. I mean, here's a trader who's suffering, and yes, he does have strategies which he's batting over 75%, over 70%. That is the whole purpose. You have traders who are doing much better than this too, in the high 80s, low 90s. That is the entirety of our intraday strategies. That's how you get rid of FOMO. There is no other way. Holding losers too long. The best way to cut out your losers is this, and this works every time. What you do, and I think I know one trader in the room who this is not true for, but every trader I've ever met, this is true for. If you actually look at all your winning trades, I don't care, your account's down, you have a bunch of winning trades, you have a bunch of losing trades, right? It's not like your account's down, 100% of whatever you touch lost money. So what you do is, and you don't have to go crazy, just for the last 30 trading days. Check this out. You ready? I want you to get the time duration, write down how long between your entry and exit you were on every one of your profitable trades, and write down your entry and exit for all your losing trades, and take an average of all your winning trades times and an average of all your losing trades times. And for example, let's say your winning trades last 2 minutes and 10 seconds on average. Your winning trades 2 minutes 10 seconds, and your losing trades, for example, are like 4 minutes 30 seconds. And this is what you do when that happens. I'll show you. And this solution works for everyone, but you have to look at your trades. If you're like, Mark, I want to solve it, but I don't want to look at my own account, my own trades. Okay, that, do you want to become a better trader? Do you want to take my advice? I've solved the holding losers too long dilemma for everybody who follows what I show them. So what you do here is, there's this cute little thing called timer on your iPhone. I don't know, whatever it is on your Samsung, or do you really use a Huawei phone? Anyway, point is, so let's say your average winner is 2 minutes 10 seconds. So you literally just come here, you set an alert for 2 minutes 10 seconds, you hit the start button, and then you just wait to hear the beep. So you wait. So you enter a trade, you hit the 2 minute 10, you hit that little green start button right there, and as soon as you hear this, that's how you know you need to start exiting the trade, or put your stop, like change your stop to be as tight as possible, or just exit. Whether you're up money, down money, break even, exit. And I know people are like, whoa, but my stop loss didn't hit. You want to know what's so fun? You want to know the funniest thing? about traders who always hit their take profit target or always stop loss and nothing in between. Just about every single one of those traders lose. Just about every single one. And I know they tell you, you'll see these videos and, oh, this trader makes money and he does it. And yeah, you're looking at the exception to the very strongly statistic rule. You cannot do that because if you could do that consistently, every one of those people, it's the easiest thing to program in the world for a robot to do so, an algorithm to do so. You don't need to be a human being to do those strategies. Everybody would be doing them if they were making money, but they don't. The way they're making money, besides for flashing you their winning days and hiding their losing days from you, is signing you up for a service. I mean, I've been in this industry long enough. I mean, just being real. So if you're holding losers too long, um, you need to find out the average duration of your winning and losing trade and set a timer on your phone. Literally, I mean, it's like a standard thing on all the phones here. You have whatever it's called, like clock right there. You see that? You see that? It's called like clock on the phone. I know it's like a little fuzzy. Clock. Yeah, there you go. Clock. Yeah. I have a goofy face on my phone. Anyway, so you go to the clock and that's how you do it. That's how you prevent yourself from holding losers too long. Fear of losing money. This is generally traders who fear of losing money is you've been in a very negative place in the past, and as soon as your position is down or up a little, you'll throw it away, or maybe you were down a little bit of money and then you are up a little or break even and you're happy to be break even, you throw it away. This is actually, to me, a myth. I don't think fear of losing money is a bad thing. And I know people on Wall Street, you got to be in it to win it, like any other barking carnival clown. You got to be in it to win it. I lived in Brooklyn, so I walked by Coney Island, and they have like the carny games, like the carnival games that are like, just shoot a basket in here and win, but like the rim like can barely fit the basketball, like one of those, or like an everyone wins game where you throw the dart at the balloon. You know what I'm talking about. You got to be in it to win it. You got to pay to play. Like, stop. There's nothing wrong with the fear of losing money. A fear of losing money is a very healthy thing, in my opinion. And I know people on Wall Street who are stuck in the 4357 paradigm are trying to pitch you a whole group of nonsense, are going to tell you that this Melnick guy, he's crazy for thinking that. You shouldn't have a fear of losing money because I know what I'm supposed to tell you, because you're going to make a lot of money on the trades. You shouldn't be afraid to lose some and give it back. And then they'll say, well, let me ask you this. If you're batting 50% and you're making 2 times when you win and 1 time when you lose, heck, even if you're batting 40% and you make 2 and lose 1, you're going to come out ahead. That is one of the oldest pitches in the book, and it fails for just about every single human being on the planet who tries it. Okay? It fails. But Mark, that's what I was taught. Exactly. Exactly. That's what you were taught. It sounds nice. You want to know what that is? It's an excuse. It's an excuse to give you a bad methodology and have you believe in it. Oh, well, losing's okay because I could be right 40% of the time. Yeah, you're going to be so psychologically toxic. You're going to leave the game so ego bruised. You're going to destroy your relationships. You're going to be mean to the people around you. Oh my God, is Mark talking to me? You know how many divorces are caused by that strategy? You know how many divorces in the United States, how many breakups, how many bad events, how many diseases from stress are caused by these methodologies? I don't know that answer, but I guarantee you it's a number that if we did know the answer, you would vomit at. All right? Trading is supposed to be psychologically safe. It's supposed to be as stress-free as humanly possible. Nothing's 100%. I get it. And you are supposed to make money the majority of the time. You are supposed to make money the majority of the time, the vast majority of the time. Otherwise, as a generalization, your strategy sucks. Otherwise, your strategy sucks. Why? Because why does your strategies, like, you have to realize humans, you can't just base it off numbers. People like to say numbers never lie in trading. They're the most dishonest things ever. Need more proof? How about the guru who showed you how well they did following their methodology? And then you're doing the exact same thing the guru has done, exactly to a T, yet you lose money. Why is that? Why is that? All right. Well, you asked me. Allow me to. So let me ask a question. So please explain. I mean, I'm not a dummy. I've been around 21 years on Wall Street. Just explain it to me. Explain it to me why that happens every time. You know what? I have a 5-year-old that can replicate my numbers on earnings, maybe not intraday. On earnings, my 5-year-old can do all these numbers. My 5-year-old bat 6 for 6 yesterday. My 5-year-old batted 6 for 6 on yesterday's earnings ideas. Do I bat 100% of my earnings? Damn right I don't. Way less than that. Yeah, you can replicate those numbers. Entering at close, selling at open, exiting at open, entering at close, exiting at open. Anyone can do that. But why are so many people failing? So fear of losing money is a safe thing. Your body has an aversion to it. How many times in the medical industry or even the natural path industry, when people try to go for natural ways of dealing with illnesses or, the medical route to deal with illnesses, how many of you guys have ever heard or gals have ever heard that you have to trust your own body and listen to your own body? Your body is trying to tell you something. I think, oh my goodness, how many times have I heard that phrase? If you have a fear of losing money, your body is trying to say, hey, attention, insert your name here. I'm not going to feel too good if you go ahead and lose this money. I'm warning you. Listen. Well, what do I do? Not the same garbage strategy that the person telling you shouldn't fear of losing money is doing. There is nothing wrong with the fear of losing money. Just make sure your methodology makes you feel good and you will get over it. Next one is treading water. This sort of goes with this. I mean, these are just issues from traders here in the Newsbeat live room that I want to address. If you're treading water, most people who are treading water came from a place where they were hemorrhaging money. And if you get to the place where you're hemorrhaging money or blowing up accounts or losing money to the point where you're making a little, breaking even-ish, like in that range, you're actually improving dramatically. Do not underestimate your progress. Is that where you need to be? Yes, right now, not in the future. Well, how long in the future? I don't know. Tell me your genetics. How was your upbringing? Did your parents beat the crap out of you? Did you have any traumatic events in your life? There's an infinite number of questions that I can ask you. So no, everybody has a different time frame. Some people are easier to cure of psychological toxicity. Some people are harder. Me, extremely hard. I had to go the hard knocks life to cure my psychological toxicity. It took a long time. Some people, they solve it within the first week, month, and it's easy. Me, I'm not, you know, I've been shot at, sliced, stabbed, whatever. I had a very rough upbringing. Maybe that's why I'm not using excuses, but that's the type of upbringing that I was part of. So, um, curing psychological toxicity for some people will take longer than others. You just have to sort of accept that if you are treading water, from a place where you are losing money and hemorrhaging money, you're actually in a very improved step. You're probably doing very well. You're probably doing more things right now than wrong. Don't downplay your progress. Okay? Don't downplay your progress. Mark, I started being able to hit 30% of my three-point shots, but I'm not like Steph Curry. I'm a failure. Chill. Okay? Next one, aggressive multiple positions. Now, there are traders who counteract FOMO by opening up every single thing that they want. They wanna open up every single position to make sure they don't miss anything. Here, if you're losing money doing that, here's my thought. Be more calm. This is a very hard one to solve because you're actually suffering FOMO. And the correct way for FOMO is to do a consistent strategy, and you'll usually end up just entering on a whim and doing things that you're not supposed to do. So, it's like if you're doing something you're not supposed to do, I mean, you have other issues as well, but the cure for FOMO is a consistent strategy. If you found the one thing you did best, you wouldn't have issues with aggressively opening up multiple positions. Just want to share my final thoughts. You could download my psychology ebook. What I tried to do here in the Newsbeat live room is I tried to bring immense value through the entire service. The service isn't like put it this way, you ever hear that you know, that the sum of the parts is worth more than the whole? How many people have heard that one before? Like the sum of the parts are worth more than the whole? I could take my entire service and just break it apart, an earnings service as consistent as this, you guys would pay a lot of money for our intraday picks. You'd pay a lot of money for my group coaching that I do. You'd pay a lot of money for the Twitter service that used to cost a lot of money that is now free. You'd pay a lot of money for the passion, the fact of how much time I spend with you, the personalization, the making you feel like a family member to the room as opposed to just a number. You'd pay a lot of money for. But instead of nickel and diming you for every one of those things, which most services out there on Wall Street do, we really try to combine all those things I just told you into one. And that is what we did. I do care about your success. There's a free psychology ebook. Make sure you click the link in the description. How to overcome psychological toxicity in your trading. A lot of what you read in there will help you solve some of the answers. It costs you nothing except your time, which I hope you will find that it was very well spent. And with that being said, ladies and gentlemen, thank you for spending time with us on a Friday night. I hope you guys enjoyed this Newsbeat show. Happy trading, make money. And I will see you guys tomorrow, probably for another show, the day after for another show, and Monday for our free Newsbeat Live open house. Come check us out for free. Have a wonderful weekend.